I actually do eventually think that's the case, right? So, right now we have a strong economy, so they can stick to that 2% and say, hey, listen, no big deal. We got to push it down to 2% before anything can happen. But tell me it's going to be 2% if we're in a Great Depression, right? Obviously, at some point, there's going to be a tipping point where the economy is so weak that they're going to say, all right, you know what? 3%, close enough, 2.8%, whatever it may be. Now, will it be 4 or 5%? I mean, probably hard to imagine that, because remember, as soon as they start printing again, inflation probably starts to rise again. So I think 3% maybe, but hard to imagine at 5% they would. Yes, 50 basis points to me, foregone conclusion. It's all about what they say, right? So the statement comes out at 2 with how much they hike, and then the key is going to be, what do they say in the statement, and then the press conference at 2:30. How does he tweak that when people ask him questions? The initial thing is the algos read every word that comes out and they react to every word. So like if it says something hawkish, they're going to react in one way and all of a sudden the market's going to pop that way. Then they get to the second word in the statement and it could go the other way. So you usually do see this really kind of whippy up-down move initially. But then within a few minutes, you'll see the beginning of a general trend in that announcement. Thing that happens now, institutions have these computer programs that anytime news breaks, they scan immediately for a set of words, right? And if it's like nuclear war, all of a sudden, right, imagine they scan that and they see that, it's going to be like they're going to automatically sell the market. So that's the initial reaction. And then what you usually see later on is the digestion of the actual information, where people say, wait, is that really what they meant? What are they, this and that? And that can be the next move that comes in around 2:30 or later. Yeah, so let me show my charts here and get that underway. Bear with me as I do that here. There we go. Toggle screen. Perfect. So what we have basically, this is the S&P 500. And one of the things that I think we should pay attention to, I'm going to get rid of some of these extra trend lines, is that right now you have the S&P. This is from the all-time high on the S&P to the second pivot, to the third, to the fourth. And then yesterday we had that wild gap up on the CPI and we came right back below. So going into this is a huge level. If it breaks, it can free the market for a short-term rally, potentially maybe all the way up here to around 4,200 and change on the S&P. But you have to respect resistance. And again, markets are underneath this line. And every time we hit this line, we have a bigger sell-off. So just be aware of that. In terms of bias, I'm always bad at guessing what happens when the Fed comes out, so I'm not going to try. I can just tell you guys that we're at resistance. There's a chance that we could break it, but until it does, you have to be a little bit on the careful side here. Awesome charts, right? So what I mean by that is you had this move up, and then we had this beautiful bull flag. This is what's called a bull flag when you go sideways and consolidate. And that bull flag, just like the name says, it means that the probabilities are telling you there's a move up coming. And we've gotten that move here. Now, in terms of upside, like where the heck could we end up going? The biggest thing to me, there's going to be a big resistance coming up here that's right around 18,500. You can see how, number one, how all these lows right along here, they kept on hitting it, bouncing until we broke on the FTX debacle. So what you have to understand is that once support breaks, and it was clearly support over here, this now becomes resistance. So if Bitcoin pops here, it's got to fight through the 18,500 level to really get the next leg up. And so right now we're coming into resistance on Bitcoin. We'll see again what that means for the Fed statement. You're right. In general, when you break above resistance or you break below support, there's this tendency for the market to check back to that level. It's kind of like going back to what I call the scene of the crime. Right. It doesn't always have to happen when you get these explosive moves. But again, looking at charts is a matter of probabilities. I would say about 70% of the time it does check back to that level, which, by the way, you could arguably say that's what's happening here, right? Here you broke support, and now look at what we're coming back into. We're coming back into the scene of the crime right at that level there. So that's why this is going to be such a big level, because most of the time, this is a bigger bearish flag versus the small bull flag here. Most of the time, this would be the move on Bitcoin that should occur. It doesn't mean it will have to happen here, but I think investors need to know probabilities, and probabilities are favoring a hit of that line, and then we should start to move down again off of it. Yeah, 18.5.
What's the
We're just,
Dixie
I mean,
looking?
literally we're at 18.3 now. It certainly doesn't give us a lot of upside here. I'm hopeful that maybe, the greatest Fed statement could just rocket us through that level. But again, it's, we'll have to see if that's the case. I do follow the DXY absolutely, because again, it's had such a big impact on the overall market, right? So when the dollar was going up, generally it's pushing Bitcoin or putting pressure on Bitcoin and cryptos. It's also putting pressure on gold, silver, as well as the stock market. So you can see the dollar's actually falling here on the daily chart. We've actually come in quite a bit. And then, the one thing I would just point out here is you haven't seen this in Bitcoin because obviously Bitcoin has other issues like the FTX debacle. But if you look at this drop in the dollar and then flip over to the S&P 500, look at the corresponding move up in the market, right? It's basically a 1-for-1 where when the dollar goes down, you generally have a move up in the S&P. So I do follow the dollar absolutely, as again, it does have an impact on the market. By the way, we are now, what are we, less than 3 minutes away from the Fed statement?
Yep.
So really what I'm seeing here, and I'll flip up my charts here as well, is that basically when that announcement came out, the S&P took a nosedive here, and you can see this big red candle. And what that tells me is that it's not the 50 basis point hike, right? People have to understand that the market already knew that was coming. There was something they always release like a statement accompanied with it. And it must be something in that statement that was a little bit more hawkish than the market was anticipating, and that's why you got this sell-off on the S&P 500. On the spiders here, we went from basically 405 all the way down to 399, which for a 10-minute candle, this is a 10-minute candle, that's a hefty drop. It is getting a little bit of a bounce here, but nonetheless, there's something in that statement that's a little bit more hawkish than anticipated. Yeah, the biggest thing is, so what I've always noticed is Jerome Powell, they put out the statement, they see how the market reacts. A few statements ago, the market was rallying tremendously, and then Jerome Powell didn't want that, right? Because the higher asset prices go, the harder it is for inflation to come down because people feel richer. When they feel richer, they go out and buy that new car, and basically it stimulates inflation. And so he came out in the press conference and was the opposite. He was so hawkish, and the markets then took a nosedive. So there's always that chance where you could see a total reversal in price action during his comments.
So
I'm not sure if it's, I think for the most part, the Fed wants to make it clear that, hey, listen, we're going to stay the course here until inflation comes down. But I'm sure that there's specific words he can use that would shock the markets more than other words, right? And it's the difference of literally replacing one word with a slightly more harsh word. And then all of a sudden the algos, like we were talking about, and investors freak out, oh my goodness, he used that word. Oh, so yeah, it's like that. Yeah. The 5% is the Fed funds rate. I think the biggest thing for the economy is what is the 30-year mortgage, right? Because that's going to be generally what people are going to be getting if they're going to look to buy a house. And we've already seen the housing market come to a screeching halt. And just think about the chain reaction, right? The plumbers, the carpenters, the electricians. I mean, everything goes through that housing market. So the economy there's no doubt that we're headed to a recession in my camp, just based on the interest rates even being where they are. At this point, I think any additional hikes, and my guess is they'll do a 25 basis point once in 2023 and then probably go to net zero, no more hikes at least. They're not going to cut, but no more hikes. But I think that, I would be shocked if we get above 5% on the Fed funds rate because I don't think the economy can withstand it.